Good evening, good afternoon, good morning, folks, wherever you're coming from or whenever you're watching. I do appreciate you guys checking out my video, and welcome to my channel, Money Me. So today we're going to talk about, it said the S&P, here it is, June 30th, 2022. The S&P closed the worst half of the year since 1970. 1970! I wasn't even born yet in 1970. So that's how bad, and I tell you, it's even shocked, I think, a lot of pros, and even the people I even watch on YouTube. So it's been a real struggle, and I don't know about you. Are you still watching your portfolio? Are you still trading? Have you given up? Comment below. Are you buying and selling? Are you staying the course? Tell me, share your story. Tell me, a stock you've lost money on, or something that's really like you're just in shock, because the market really, the last 9 months more so, has really, a lot of stocks peaked out in September, November, and it's funny that some stocks peaked out in September, right when the stimulus checks got cut off from the government. So, all right. So today, what I decided to do is talk about, since it's the most popular stocks are basically the FAANG, and I'll go over them. And I have my Webull desktop app here. If you guys are interested in joining on Webull, look, I don't care. The link will be below. If you do, you sign up, and you get different promotions, 2 or 3 free shares they do. But if you click my link, I get a free share. So don't feel obligated, but I put it out there. So. And full disclosure, I am not a licensed broker. I guess I got to say I do this for entertainment purposes, because I never tell you to go out and buy and sell any stock. I basically share my stories of trading and talk about really the market news. Now, here on Money Me, we're going to be talking about all things money, but we have geared a lot towards stocks, options, and really the economy. But in the future, and I say I want to put out more content, and sometimes I think you just need to, if you're not on margin, you just need to kind of ignore or the news and what's going on. If you're doing dollar cost averaging or have a 401k at work or an IRA, you just can't sit there and worry about it every day. Now, if you have a big portfolio that you trade a lot, and you're for example, you have $500,000 into one stock. I had somebody ask me on the last video, if you had to pick one stock, to put in, and I said, never put everything that you have in one stock. You got to learn to diversify. So we're going to address, we're just going to talk about FAANG. If you guys are investing in it, let me know. So let's start off, and obviously it's FAANG. Now, things have changed with FAANG. Facebook is now Meta, so it's not even Facebook. The second A is Apple, the Amazon, the third one is Netflix, and Google, which they call Alphabet, is supposed to be the G. So, but those are the most popular stocks, the big tech stocks that really get all the the news coverage. So we're going to start out with Facebook. Even now we got to, and no one says I go on Meta. We go on Facebook. So it's kind of crazy. But here we got Facebook today at $161.25, and we're going to look at where it peaked out at $384 back in and these are approximate dates, so please don't hold me. As you can see, I'm lining up. Yeah, September the 3rd, 2021. And I had said that a lot of stocks had peaked out in September, and it's just been really nothing but downhill then. And they have got a good business, but they have a lot of issues themselves, political issues, and I think really just trying to come across more as a positive. But basically this year we're going to talk about how far it is down. If you are a holder of any of these stocks, tell me, put a story there. I owned Facebook. I remember when I went back when I was in the restaurant business, a customer had come in and it had gone to like 40. I said, wait till it pulls back to 25 and then buy. And I think it ultimately had gone down to $8. I remember buying it years ago for in the $25-$30 range and got too excited and sold it at 50. And waiting for it to pull back, and it never really did. And it look at it, it ran the way that it did. But Facebook this year, at today's price of $161.25, is actually down 52%. But I mean, it's funny that we say that 52%. And and I'm going to say this: if you watch any of my videos, you will see that I predicted that the market would probably be down 30-35%. That was the Dow. And I even talked about pretty much the NASDAQ would probably be about 10 or 15% higher. So basically the NASDAQ could be down 50%. So even at down 52%, you got a market cap of $438 billion. $438 billion. Years ago, I mean, I've been trading the market and have interest in the market since I was a teenager, and pretty much since I'm 21, so over really 25 years doing stuff and trading stocks in the market. And you never saw these kind of market caps years ago, and that's clearly what is happening. Is you're basically getting a PE adjustment, price times earnings. Now the price times earnings actually could even not be 100% accurate, because as we're in a recession, they basically are saying today is that you're going to have earnings drop, which will adjust that price times earnings. So that's Facebook. I like Facebook, but would I be jumping in on it right now? No, because there's a lot of unknowns. There's going to be, I'm sure, advertisers pulling back. Are there going to be trading opportunities with it? Of course there is. But you still could get another washout, and I would just sit tight on Facebook. You guys in the comments below, tell me what your favorite FAANG stock is to invest, and maybe we'll comment on the future. What was the? So let's look at Apple. Apple stock is at 136.72. And I'm using the Webull, but I also have my phone here where I could pull up CNBC, and it gives me a good, without having to jump all around. The market cap on Apple is $2.2 trillion, and that stock, I remember. Let's real quick. That stock back 5 years ago was $35.50. So even at 136, but that stock also was $182. When? January the 7th, $182. So Apple is down 23%. Apple, I actually lost money during COVID because I thought to myself, well, people aren't going out buying cell phones, so I had shorted it. And I took about a $4,000 loss, and I was like, nope, that's it. I'm done. And I'm glad I did get out, because it did run further. So crazy times, I'll be honest. It always seems to do the opposite of what you think sometimes. Sometimes I always wonder if you guys ever watch Seinfeld, how the character George Costanza always said he's going to do the opposite, and things always seem to work out better in that episode. So, all right, let's go to Amazon. Amazon just did, I think it was a 20 for 1 or well, Amazon's 106. Yeah, so it did, I think it was a 20 for 1. Oh man, jeez. I'm not tired. I don't know why I'm yawning here. But 20 for 1 stock split. And is it mentioned in here? But yeah, I mean, we all remember that stock, and that stock I remember had peaked out. I mean, it was up in the $3,000 range, so now we got to adjust it for the split. But so it peaked out, let's see, 188.65 which was July 16, 2021. So Amazon is down but roughly 36.3, we'll say 36%. But there's Amazon too. Amazon was $46 5 years ago. 10 years ago, Amazon was $10. I remember, honestly, when the market crashed back in 1999, 2000, when Yahoo, Webvan, and all those guys crashed, that stock was $5. And oh, what a tremendous buy that would have been, because, I mean, I don't know if we can look at it on the Webull chart here, if we can go back that far. Yeah, 1999, look at it, split adjust it, 2000. I mean, we're talking pennies. 7 cents in 97, but I'm talking about when I saw it. I mean, basically 67 cents. I mean, it's just crazy to think how really. I mean, well, even here, 28 cents on 2001, November 30th, 2001. So even really after 9/11, you could have bought that stock. Now, obviously, this is split adjusted, but I do remember the price of $5, and you know, it was something like 200 times your money you could have got at one time last year. So, really, when it went sideways for a long time, and it had a little bit of a slow rise here, but really the past, I mean, it was crazy. What happened in 2020 with the shutdowns and with the printing of the money, it was just kind of crazy how the market really. I mean, we pretty much had a lot of stocks that were 100% plus gains. I mean, some even more, but, you know, in reference to talking to, I mean, obviously you could see the chart here, and at a quick reference point of basically 97 to 188, you know, 100% move in a year or two, you know, typically when you're looking, and I know growth stocks will give you more than that, it happens, but what craziness. So, and to keep this timely and not talk real in depth about everyone, we will, you know, jump ahead to the next stock. So Netflix, I mean, look at that one. Jeez, Netflix, unbelievable. And Netflix, I tell you, I owned back in the day. I remember I owned it for $45. It didn't do nothing for like 6 to 9 months. I got out of it. Maybe this was like 10 years ago. To watch it like go up twice and split twice. So, oh man, when you don't have the patience sometimes, but look at the poor, you feel bad. I mean, look here, basically $701, November 30th. And here we are. This is the worst performing FAANG stock, down 71%. Full disclosure, I actually, in a 401k now for that I manage, have gotten in for my son, and we own some of this stock now too. Not a huge position, but still, we're in around 175. It was just recently had touched again in the 200 area. I mean, look, we thought almost we were breaking out, 207. It's funny because that week I actually had some 205 calls that I had bought and made a couple $100 on it, and luckily I got out that week because, man, it's just been nothing but down. But that's where we are. There's a lot of uncertainty with inflation, and obviously people just can't afford to be dumping money into stocks to be losing when they're trying to you know, buy gas or heat the house or buy, you know, put food on the table. So I like Netflix here, honestly. I mean, Netflix has just taken such a huge beating. Will it ever go back to 701? No, I don't think so. I personally think we could see 250. We might have to be, it might not take it till next year, but you know, even at 250, that you're talking roughly what, about a 45% gain. Their market cap is 70. I'm going to round up, $78 billion. So a lot smaller than, obviously, you know, your Apple was at 2.2 trillion. Facebook 400 some billion. Amazon, I forgot to bring that up, how much their market cap is. Their market cap also is a 1.1 $1.1 trillion. So it's just crazy, these valuations. Now Google, the last one on the FAANG list, a split is coming up too. I'm not quite sure. Is it 10 or 20 for one. I don't quite remember, but it doesn't matter. But Google is 2,179, and their market cap is Google market cap is $1.4 trillion. So these are not small companies, and even losing another 20%, these companies would still be huge. Google is down 25%. And I'm gonna put the what the percentage is, but basically Netflix was the worst. Facebook, Meta is the second. Amazon, and then Google and Apple. Apple and Google are almost the same, 23 and 25%. So, all right, guys, I hope you like this video. And the big stocks are down. There's a lot of stocks even down more than 25, 50%. I mean, me personally, I know I've had stocks down 70, 80% that analysts were out there, it's going this, it's going that, and never listen to anybody on YouTube, television without doing your own homework and have confidence into know what you're investing in. And there's lessons to be learned about these hypes and crashes and what happens, and don't get caught up. And so, hey, I'd appreciate if you subscribe to moneyme. And give me a thumbs up, hit that bell, and so every time you hit that bell, basically it'll tell you when I put out another video. I'm trying to do more content. I am busy, obviously with other things, and but I like doing these videos. I like talking about money and talking about business, and just really kind of just showing everybody that a common person could invest and make money. But we got to be honest with ourselves. We got wins, we got losses. And which reminds me of people, I hit $200 on the lotto, or I won $500 at the casino, but they don't tell you about the times that they lose or the money they put in. And I try to be transparent 100%. I don't make money doing this channel. You need 1,000 subscribers and so many watch time. I'm not there yet. I'm hoping actually we can get to, when we get to 500 subscribers soon, we're going to give a gift away. It's a Charlie Munger and Warren Buffett gift that was from the stockholder meeting a couple of years ago, these rubber duckies. So we're going to do something special in the future. And actually, when we get to 1,000 subs, we're going to give somebody a stock certificate, and we'll do like a wheel and have different stocks on it. And so, I'm excited about the opportunities. I think we're constantly need to learn about things, money, and really have to make good decisions to put ourselves in better long-term positions. And I know it's tough. Not everybody, I can't afford to save, $25 a week. And that's where then you have to look within yourself and maybe sometimes cut out things or learn how to budget. We're not teaching enough of this stuff in school that a lot of people can't even write a check or fill out an application. So, all right. And we'll discuss more of those type of things even in future videos. Guys, I'll see you again. Bye.